What we're going to do in this update is that we're going to take a look at the main markets such as Bitcoin, Euro dollar, DAX 30, and so on and so on. Uh, some technical analysis, talk a little bit about what's moving the markets. So what are the drivers that we should be watching? Before we start though, as always, I need to stress that trading financial markets unfortunately is risky, and there's general risk that we'll lose all of our invested money, so please bear that in mind before you start trading. As well, don't forget to check out today's headlines. We have had some data, Aussie data out overnight. That's the employment numbers. Those are really important for the longer term outlook for the Australian dollar. And from New Zealand as well, we had consumer price index. So two really sort of important indicators. If you watch any economic indicators from big economies, then I would watch the labor market report and the inflation report, and then I would pay attention as well a little bit on, well, definitely on the central banks, and then uh, as a fourth thing to keep an eye on are the PMIs. But really the three first ones are the most important one. So check that out. Okay, let's begin. Let me just load the charts. I don't know if I said it as well, but financial markets trading unfortunately is risky. So bear that in mind before you start trading. Okay, this is the euro versus the USD, and the market is absolutely doing nothing today. It is potentially, getting ready for a break to the upside. It wouldn't surprise me at all. But we need to take out 124.78. Until that happens, we're gonna be stuck in a range, and as long as we're stuck in a range here, then there's really no point for us doing anything here. But yeah, take out this high, most likely to the upside. Here's Bitcoin, not doing too much, and this is a bit of a warning sign, definitely. You see, the longer time something spends like this, then when it finally breaks the downside, it becomes much more difficult for the market to bounce back up again, because there's so many people that bought here, and they all sort of get squeezed out. And as soon as price bounces back up again, it becomes a situation where people that bought try to get out of their bad positions, and then the market just continues to move to the downside. So it could be that this market is forming some sort of a, you see the section here, and then if it takes out the lows, it could go down again. Now, when it comes down to the big picture, I mean, if we just look at this chart, the market did bounce from these levels. It also bounced from these levels here in February. So from that sort of perspective, I still like the idea that probably will head higher. If we head up to 11,000, that wouldn't surprise me at all. But in the short term, we have hit some sort of a break here. Really, there's no much momentum, but we are seeing. So you're fully aware, we are seeing momentum in other crypto coins. So it might just be that people are not necessarily that interested to buy, to invest in Bitcoin, because Bitcoin at the end of the day obviously had a good 2017, but then you have other markets that even had uh, better opportunities, or like better moves, sorry. And those are some of these altcoins, where people would start with small amounts of money and potentially do 3,000, 4,000% or something like that. Anyway, as for today, tactically, I think this market again is still gonna be bullish, but I like this for sort of, if I would trade anything, I would look for that move to the upside like that, because there's a risk here that this market can come down. So one tactics that is commonly used from forex traders is that, for example, the idea was to go long here, so we're up with about 9%, and then wait for book profits now, and then wait for the market to take out this high, which is 3.23% away. So you give up about 3.23%, and then when the market, if it breaks this level, one just gets involved here and potentially get another 8, if not more. And sort of the profit from the first position is used to buffer any losses, and stop loss would go down here somewhere. Um, so booking profits and then paying a bit by for booking those profits. And the reason for booking those profits is just because there's a risk that this goes down here in Bitcoin. It's not my main scenario though, but if one is careful, don't want to give up those 8% or whatever, then this is one option. Here's crude oil. It's just hitting higher and higher and higher. And this market sometimes does this kind of stuff. It doesn't really correct. We were trading sideways. The idea was to buy on a dip, but the market just continued to move to the upside. And in one of the top ideas for that we had in our special webinar was to buy at the breakout. And I said if we take out that high, I said the market could go much, much higher. So I said if we take out this high, this market could push up. There's not a lot of resistance until we hit this sort of November 2012 low, and more of a correction. I suppose I wrote an article about it on TradeCaptain.com. Now, tactically, yeah, we want to be long. I want to be long, but I wouldn't be buying here at these levels because we're buying at an overbought condition, and it's clear to see that it had a very nice run. So I would just wait. I'm not sure if it's gonna come down, but we'll probably come down. Might hit $70 first per barrel, but when and if it comes down to the breakout level down here, then I think at that point it makes more sense to actually do something about it. And I think we can reduce sort of actually just leave the trend define level here, but most likely it's moved up so much now, so you just watch this low here. And here's gold. It's like the euro really. It's not much happening here. But what I noticed, I don't know if you noticed, but there's been an entire increased correlation between crude oil and gold. And obviously crude oil is $70 per barrel. And the way this continues to go, we will have higher inflation globally in about 1 year's time, something like that. So maybe people are using this as a hedge. Not really sure, but if we take out the high, much like the euro, is going to become a really interesting market. And as long as you trade within this range, there's really no point doing anything here. There are actions and stuff happening. So I've been telling you guys, I'm personally still long a bunch of cryptos. So there's action, but there's no action in gold. You just need to put like a little alert or some sort of a system. Most brokers, they have a little alert. You get an email or a pop-up or something, and when gold actually takes out that high, one can get involved. Till that happens, it's really not worthwhile watching it. Here's the DAX. Now, the DAX is slightly overbought, as you can see down here, but I wouldn't really worry too much about that. What I'm worried about in general is the fact that we had a little bit of a strong move. Now, the idea was to buy here and for it to go up, but if you look at the S&P 500 or the Dow Jones, we did share some setups and ideas on this in the technical analysis section. Then we did have some nice moves to the upside. Let's actually show. This is Yuri's update, and this is Yuri. He did this update yesterday, and you can see here how the market in the S&P breached the upside. So it had a nice little push. And here at TradeCaptain.com, I started to publish articles, and I said in general that the market is probably going to try to bottom out down here, and it did. It did. It went up. This was a very good opportunity, and it went up, but it's starting to reach some highs, and you can't really see it here. But if you look at other markets, if you look at a fresh chart of the S&P, you're gonna see that it sort of hit resistance. It's looking to potentially roll over. I booked profits yesterday. Here's the Nasdaq 100 as well. Good opportunity to book profits. I think these two markets could potentially hinder the German DAX rally much further. There's no right or wrong here. Technically, I'm gonna remain bullish about this low, so I'm not gonna make any changes to my bias, but you need to be aware of or that you could have some sort of pullback in the US markets. Okay, let's see now if there's any questions or anything in the chat box here at the live trading room. Even if you don't have any questions, just say hello. That's always great. Oh, this is good. Here's Antonio. Good morning to you, Antonio. So this is here. From my experience, how reliable is the retracement to the 50 to 61 Fibonacci? I know it's been a basic trade of your system for years. Oil, I was waiting for the demand zone just above your trend defining level. Wasn't triggered for 50 ticks. Pity. In these cases, do you get in anyway because even if zone hasn't been hit? No, I try to avoid that. I try to avoid getting in even if my level has not been hit. Let me give you an example. Here, for example, this is just the New Zealand dollar. So I just pull the fib here from the Fibonacci. We always pull it from the trend defining level and then to whatever the high is. And my original entry was down here at 72, 98 or something like that. And then the market bounced yesterday, so it bounced up without touching my entry, and then I adjusted the entries a bit, so I pushed everything up a bit to 73.06. So I push it up a bit, and then, especially if it's the end of the day, like it was here, because this is yesterday morning. Let me check. Is there something wrong with this? Yeah, someone has. Let me just. No, sorry, it's the 4-hour chart. Yes, we touched this yesterday, but I was looking for this to head lower, but it didn't. It just went up. And when it's like this, it just adjusts things a little bit to the upside, and then hope for a touch of the move to the downside. I think what you can do, Antonio, in general, as a minimum, when you're looking to get involved, it should at least touch the first Fibonacci level. Because in the case of crude oil, let me explain to you. So we did barely miss that, but this today, it just rallied to the upside. But we did a similar setup here in this presentation not too long time ago. So the market went up, as you might remember here, and then it went down, and you see it went down without really correcting. I'm sorry, it corrected, but it didn't correct too much, so it went up. And then the next time it went back down, it cut through this level, and we got stopped out on that one, if you remember. And then it went up, and then it went down. So when I was looking at this yesterday, I said to myself, well, it's very likely, up, down, and then like that. But it's clear to see now that this market has moved so much that it will probably continue to head to the upside. So what can you do then? Like, what's sort of a good formula? Well, it's a little bit like trading a lot of times. Well, it is a numbers game. So especially if you're going with the trend the way I am, it's not always. Well, actually, in fact, most of the time, the market is not trending, so it will not have a very strong trend. So you need to trade and trade and trade, and then a few of these ideas are going to develop into something really nice. And the idea is just to do like I do here. Like, you have a lot of different markets, and you shouldn't be afraid to trade. Now, some people say like, oh, I just trade the euro, I just trade the pound, or I just trade gold, or I just trade crude oil. And there are people that do that. The thing is this though, is that every market has sort of 3 different types. It's either trading up, or it's either trading down, or it's either trading sideways. So if you're trading, say, crude oil, then you need to be good with it when it's trading sideways. You need to be good with it when it's trading downwards, and you need to be up when it's going up, down, sideways, right? The thing is this, though, is that some markets have different characteristics when they decline. So, say stock markets, they have a different characteristics when it goes down, and a different characteristics when it goes up. And you can statistically prove this, that the volatility is different in these two scenarios. And that is an issue, I think. So what I decided many years ago is that I want to become a trend follower. In fact, you can go online and you can search for companies. So this is a company called Dunhill Capital, which is a company I known about for many years. I read about them already many years ago, and they're trend followers. So this is a chart that goes up until June of last year. Now these guys have been in business since October 1974, which is down here, and on average it produced 17.48% on year, whereas the S&P total return is 12.16. So if you would have put $1,000 with these guys in 1972, then you would have had almost $1 million, where you would have closer to 100,000 here. So these guys, they beat the S&P total return with almost 10 times over this period. And here you can see it's on black and white. These guys are trend followers. They created this system many years ago, and they're still using the same system, at least according to interviews that they have done with interviews they given to other people. It's definitely a high volatile strategy, but down 43%, 63, sorry, 35, 29. Here's down with 63. So it's definitely much more volatile, much more risky than the S&P, but again, almost beats things with a factor of 10. So we know that the system works following trends, alright? So I decided I'm going to be a trend follower. And then what I do is that I pull the Fibonacci's from a bunch of different markets. So every morning, I look at the euro, I look at the pound. So I pull, see here, this is another fib on the pound. And I do the yen, you see, Aussie dollar, New Zealand dollar. I do all these sort of setups. Here's another Fibonacci. And then what I do is that I just check the market throughout the day and see, which market has triggered my, or which market is at a level where I could enter. And at one point, what I was doing, I was just putting limit orders on literally everything, and then I would just adjust them every morning. Because I knew that if I do 10 outlooks, then maybe a few of these are going to be triggered. The problem is when all of them get triggered, because then you need to start to cut some because you're carrying too much risk. So the solution here is, do several setups and just wait for them to come to you. And when they come to you, sort of doing what you want them to do, then you can decide if you want to buy or sell. And that means that sometimes, like crude oil, you're gonna miss out. But then maybe you trade something else on the back of this. There's other stuff. For example, if you're bullish on crude, then you should see what's going on here with dollar and Norwegian kroner. So Norwegian kroner is obviously something that they're exporting country. You have the Canadian dollar as well that you can trade. So here we're not having too much of an effect, but if crude oil continues to gain a lot, then maybe dollar Norwegian kroner takes out 762, maybe something like this. Take out this level. You can check other stuff like euro Norwegian kroner. Not much happening here. Maybe pound Norwegian kroner. Not really. You have the Russian ruble. You have as well, what else do you have? The Mexican peso sort of has a bit of an influence on the, because of crude. They do, however, have an election coming up. So there are different things you can sort of look correlated markets as well if you have a strong idea. So that's one way of doing it. Another way I do it, like what I'm doing quite a lot nowadays, is that I'm just looking at the daily charts and I'm just looking for breakouts. So let me actually show you. I'm gonna share a video with you because I need to wrap things up. But I did a special webinar which was called, I call it the top trades of May. and is a video we did, and here you go. Isn't that so? Actually, I can't send it to you. Antonio, you send me your email here. Actually, send me a direct message. That's better. So go to my Twitter, and my Twitter is AlexFX00, and you send me a direct message, and I'll send you the link. For some reason, I can't share it. I don't know if you can see here, but I can't share links. Actually, let me see if I can try something different. I'm gonna go to use a different account to try to send you the link. There you go, the link should be visible now. I primarily just the reason for using a Fibonacci is just to measure sort of how much the market can pull back. So in a trending market like this one, like this is the pound dollar, it makes sense to use the fib, because the idea is this is an uptrend, right? And this is sort of a pullback in the trend, and the first thing you need to identify is trend defining level. So this is the level where we can't break. If we break this level, we're going to break the downtrend, or the uptrend in this case. And these are sort of like discount levels, like 38.2% discount, 50% discount, and 61.8% discount of the last move. So if it's a genuine bullish trend and everybody's super excited, then people will wait and they will have a bit of a discount. But if they wait too much, sort of, if they need to have like a 78% discount to buy, then it wouldn't make sense to. Then it's an indication maybe that is not a very good trend. So what I do is I pull the fib from the low to the high, and then you look at horizontal support and resistance. So you try to see, for example, down here there's a high. There's some support. So this is sort of this section here around 140, 141 actually, is a prior breakout level. So probably this whole section here should be interesting. So let's start to potentially look to buy there. Instead of potentially using this high here, because we could have used the first Fibonacci, but it was never my first choice, because if I see price going down, you just have the first Fibonacci, sort of the strong support levels are down here. So from that perspective, I didn't choose this one. So you look at your fibs, you look at horizontal support resistance, and a 4-hour works best for me. It sort of gives you the important levels, and it is possible to use a 30-minute. I used to use a 30-minute all the time before as well, but the levels were always from the 4-hour anyway. So yeah, 4-hour it is. Now, just to explain to people, make it easier to understand, I use RSI 14 as well on the 4-hour. You can see here that the market is slightly starting to reach oversold levels. It's definitely not overbought. Remember, just a few days ago, everybody was super excited here. Now it's the opposite, and then it goes down. And sort of the next factor that you can watch is you can watch at correlated markets. So this is going down, but you can see as well the New Zealand dollar is going down and sort of touches this level. So sometimes you're gonna see a market that is very, very elevated, and like this one was as well. And when all of them sort of pull back, not all of them, but like here is a good example: New Zealand dollar versus the and then the pound dollar. You see them coming down, and they're sort of both at the good levels to buy. Then that's interesting. If I flip to the Australian dollar, for example, it's not where I want to buy it. The Canadian dollar is also not where I want to short the dollar CAD. This could tell me that if this goes up and the Australian dollar goes down, then maybe pound dollar and the New Zealand dollar are gonna pull a little bit lower as well. Um, so those are things we need to take into consideration, correlations as well. Um, but the fact that both the pound dollar and the New Zealand dollar sort of are at the same levels gives me at least some indication that we should hopefully just be okay. So in this video here, Antonio, it's 52 minutes long, as I did it some time ago, and it's a video where I talked about top trade ideas for April 2018. So I shared with you guys some of the ideas I traded. So some of my better trades. So I did some good trades in the S&P, and as well I show you the charts. So I explain to you how I bought, where I bought. And this sort of trading I'm doing here is a combination of what I do here with you guys in the morning and longer term analysis as well. And I explain everything in the video, and then I talk a little bit about sort of ideas that I'm watching for this month. And we do have everybody's in the chat here right now. You will be able to see the video, and we are gonna have a similar presentation. So if you click on education and webinars, then next month on the 10th, we have top trade ideas for May 2018. So we'll take a look, sort of have same concept, and take a look at some new interesting ideas. And this is something I do actually. So I work with clients that are interested to know more what I'm buying and what I'm selling. And if you're interested to know more about that, then just send me a direct message just via Twitter here at AlexFX00. Okay, guys, we're gonna wrap things up. I want to thank you so much for joining. Antonio, thanks so much for all the questions. If you're watching this presentation and you like it, then click here on the video and smash that like button to support like that. Thank you guys. Have a good day, and I'll see you guys tomorrow, same time here at tradecaptain.com. Thank you.